everyone. Thank you for making the time this morning to come over to listen to our financial year 2012 results announcement. Before we start, a couple of housekeeping issues. The toilets are to my left. Can use those. The press conference for the media will be immediately after this event, and that's upstairs at Kiunga. And I will ask all media personnel to keep your questions after this session to that press conference and not at the Q&A for this session. This one will be specifically for the investors in the room. For those who want to access Wi-Fi, the username is annual results. The password is Safaricom with a capital S. Username, annual results. Password, 2012. Safaricom with an S. Safaricom 2012 with a capital S. Behind you is our experiential area, and would like to invite you after this to actually have a look at some of the products and services that we offer and are showcasing today. And we'll have a 15-minute break after this session, after which media should go upstairs for their session. So without much further ado, I shall invite the chairman to make the welcoming remarks. Chairman.
Thank you. Members of the Safaricom board, staff, investors, members of the media, and all our stakeholders that are present here today, distinguished guests, it's my great pleasure this morning to welcome you to today's presentation of the annual results for the financial year ended 31st March 2012. I'm sure what I'm going to say is very familiar to you. We've had a turbulent year. The country has experienced very strong economic impacts, both from internal and external factors. And the recovery that was promised earlier has been slower than was expected. We've experienced problems from the disturbances in the northern part of Africa and the Middle East, then resulting in rising oil prices, crude oil prices, and these translated into inflationary pressures in the country. And this has a downstream effect on all businesses, but a lot of it on our kind of business. We are familiar with the play-up of the shilling in the foreign exchange markets, and I need not go into this, but I want to say that this, together with the high interest rates, has had a very major impact on the company's operations. As a company, we have faced shrinking margins brought about by increased costs of doing business. And you're all familiar with the price wars on the competition front. Our customers have experienced the downstream effects of all this and of inflation, and they have scaled down their spending. Therefore, overall demand for products, both ours and others, has been a bit depressed. In the circumstances, we made a deliberate and very tough decision to push our prices upward rather than down in order to cushion the business and to protect the long-term viability of the company and the interests of the shareholders. As you will see later, this has had a significant effect on our performance, and I think you'll be satisfied that we made the right decision. And now it's still a matter of great pride and satisfaction that we report an improved performance in the year. And for this, I would like to particularly pay tribute to the staff and to our loyal customers and other stakeholders and users of our services who have remained loyal and very supportive throughout the year. And of course, this is also a reflection of the resilience of the company that is based on our suppliers and our agents and the whole network of dealers and others who play a part in our business. We are very grateful for this loyalty, and we hope that with the results we produce today, we shall continue to get that kind of support. In spite of all this, of all the kind of low lights that I have been mentioning, we still maintained our leadership in contributing 78% to the overall industry performance, particularly on the regular products, that is reflected in our customer base. The performance of the M-PESA product and its penetration, currently standing at, again, 78% of the customer base, has been almost now our flagship. It's a very, very good performing product, and you're all familiar with it. We still firmly believe that in spite of all these problems, that there are opportunities for growth. And as will be shown when you are receiving the reports for the year, we are committed to continue exploiting the opportunities for growth, both by innovative products and practices. We still believe that there is opportunity because mobile penetration as a whole in the country, we are told, stands now at about 71%. It's still below the world or international standards, although we are doing very well as Kenya in the region. But we believe that with the right choice of products and services, we should be able to participate in further growth of mobile telephony and services. In the past year, we still retained a very prominent part as a socio-economic player in the country. And you will be familiar with our activities, or our leading position in the activities relating to the Kenyans for Kenya initiative. And we would like to thank everybody that came on board and supported this initiative because it was meant for the people of the country. It was meant not so much as purely a promotion aspect of the company, but really as a true return for the people who have supported us so strongly. Through this initiative, about 165 million Kenya shillings was passed through the M-PESA platform, and we were very appreciative of this. In the coming year, we see ourselves having to continue consolidating our leadership position by staying focused and developing more and more new products, more relevant and more modern products. We will continue to improve on our voice as well as data networks, and to provide customers with quality and uninterrupted service, provided we don't have too much interference from other people cutting our cables. So we see the rest of the year as still fraught with challenges. But as a company, we think we are strong enough to face all these challenges. And as long as we get a reasonable environment, including a regulatory regime that fights to keep or tries to keep a level playing field, we will be able to overcome most of these challenges. So as we come to a year that is an election year with its challenges and so on, the challenges are also on the obverse, actually, opportunities, and we hope to be able to play a role and to, in the little way we can, assist so that the country can remain united and peaceful. After all, that's what we need in order to be able to do good business and to see the rights of the people safeguarded at all times. So on behalf of the board, on behalf of our stakeholders, I want to sincerely thank those of you who have come to this morning's presentation. We want to thank all those who have supported us so strongly in the year. I commend the management for its very, very hard and loyal, committed input into these results that you see today. And of course, thank my board for the support that is given not to me, but to the company throughout the year. With this, few comments. I would now like to invite Bob so that he can make his presentation with the help of John Tomberson. Thank you very much.
Good morning. Thank you very much, Chairman. Good morning, ladies and gentlemen. So thank you again, Chairman, ladies and gentlemen, members of the board. Thank you very much for coming this early in the morning. I know it's not easy, but welcome to our 2012 financial results. We're pleased today to be presenting a very strong set of results with improved financial performance in what the Chairman has described as a tough market. This performance really has been possible because of our continued investment in our network, and especially in its capacity and its reach. We've grown our customer base to 19.1 million, and we have achieved double-digit growth in revenues. Our core voice revenues continue to show growth, in fact, continue to show good growth. And Safaricom is executing well against a strategy of growing revenues beyond voice. And in this regard, both M-PESA and broadband have been the main drivers of this non-revenue growth. So if you just look at the market in which we operate, the effects of the foreign exchange fluctuations and inflations were widespread across the economy as a whole. And this was especially so in the first half of the year, when the shilling weakened to as low as 107 shillings to the US dollar, and inflation peaked at 19.7%. And this led to increased operating cost and forex losses for industry players. Now, with the recovery of the Kenya shilling in the second half, the operating environment has become more conducive. However, interest rates have remained high, and it has negatively impacted on profits. Now, despite macroeconomic challenges, the mobile service market in Kenya continues to grow. And at the end of 2011, the latest CCK results shows that we now have 28.1 million Kenyans who are now accessing mobile services. Mobile penetration is now just over 70%, so we still have significant opportunities for growth. And the last year, we have seen strong customer growth. We believe that this has been achieved through innovation and through delivering excellent customer experience. We've invested heavily in our network to establish the widest data network in Kenya, with speeds in places as fast as 21 and 42 megabits per second. And in fact, we currently have more than 5 times as many 3G base stations than our nearest competitor. In addition to this, and in addition to our 26 own retail stores, our distribution footprint extends to more than 250,000 outlets through our dealer networks. We've also expanded the reach of M-PESA to nearly 40,000 M-PESA agents, which has been a 46% increase since last year. We continue to expand the range of our devices to make it more accessible to Kenyans, and we've been offering high-quality smartphones from as little as 9,000 shillings and entry-level data devices from 2,000 shillings. Another example of our innovation to meet customer needs is the launch of our online customer service support. Now, we were the first large Kenyan corporate to offer customer care via Facebook and Twitter. And we find this engagement with our customer to drive speedier resolution of their problems, but also provides us with greater and more immediate insight into their needs. Now, our operational efforts have delivered significant improvements across a broad range of financial metrics. Total turnover grew by 13% to 107 billion shillings. Voice revenue has shown resilience with a 9% growth, and that has been driven by an increase in customers as well as an increase in ARPU. SMS and data have grown to nearly a third of our total revenues. EBITDA has increased by 5% to 37.5 billion shillings. Now, net income dropped slightly by 4%, or around £500 million shillings. But this was due largely to the negative impact of forex losses, as well as interest cost of 1.6 billion shillings. Now, with a strong free cash flow of 9.4 billion shillings, we're well positioned to innovate, to deliver to customer needs, and to continue our confident investment in the network. As we grow, so do the returns to our shareholders. And the board has recommended a 10% increase in dividends to 22 cents per share to shareholders. This represents a 69.7% payout ratio in 2012, which compares to 61% the previous year. I would now like to hand over to one of my co-pilots, the CFO, John Tombleson, to take you through the details of the financials. John.
Thank you, Bob. It's a great pleasure that I'm announcing this full year results. Should I go too quickly through the slides, this presentation is on our website for your leisurely review later. I'd like to focus first of all on the KPIs based on this last financial year compared to the year before. And we delivered on our growth strategy, with total revenue growing by 13%, driven by customer and ARPU growth. EBITDA grew by 5% as our cost base also grew, but by 17%. At our first half, we reported the increased cost base due to inflation, energy, and the increased costs of offshore purchases. We held this cost growth flat in the second half. Net income dropped by 4%, or 500 million, due to interest costs rising by 600 million and a realised foreign exchange loss of 1 billion. However, we have achieved a strong free cash flow growth of 110% due to working capital initiatives such as inventory management. If I focus now on the second half of the year versus the first half, we did have a very strong second half performance with a revenue growth at 16% in the half, driven by mid-year tariff adjustment and strong customer loyalty. We held our direct and operating costs flat in the second half, leading to the 54% increase that we achieved in EBITDA. As you'll recall, we reported 4 billion net income in the first half, and we've more than doubled that to 8.6 billion in the second half. Free cash flow improved dramatically, and you can see it has delivered the whole year growth in the second half. So the sustained revenue growth of 13% has been driven by 11% customer growth and a 3% increase in service ARPU, the average revenue per user. Voice is still our predominant revenue stream at 64%, but our dependence is reducing as we diversify into non-voice revenue streams. By non-voice revenue streams, we mean SMS, M-PESA, and data. In this year, our total minutes of use per customer has increased by 21%, and our rate per minute has dropped by 10%. We continue to support our growth in traffic with significant capital investments in network capacity, modernisation, and a greater footprint. Focusing on non-voice revenues. These continue to drive growth with a 27% increase over last year. SMS, M-PESA, and broadband revenue now represent 29% of our total revenue. M-PESA is the key driver and represents more than half of our non-voice revenue, with SMS, broadband making up the balance equally. And getting more granular, M-PESA continues to deliver stellar growth with a 43% increase in revenue and 14.9 million registered customers. We have increased our number of M-PESA agents situated throughout Kenya to 40,000, an increase of 46% this financial year. Our customers recognise that this is one of the most convenient methods of topping up their prepay account, with 29% of all of our top-ups coming through M-PESA. There is still significant potential for mobile internet and broadband. This revenue stream grew by 23%, and we now have 4.5 million customers who chose to use our data services in March 2012. This is 25% of our customer base. And as that penetration deepens, we would expect the average revenue per user to decline. We have achieved robust ARPU growth despite intense competition. Service ARPU, that's the average revenue per user, grew by 4%, made up of an increase in voice ARPU due to increasing voice minutes. We did have a data ARPU decline slightly due to the price decline and as we further penetrate our customer base and attract lower spending customers. Our SMS ARPU also declined due to price moves in the year. However, M-PESA ARPU grew significantly at 19% as we deliver to our strategy of increasing financial inclusion and increasing the number of transactions per customer. On to costs. We break our costs into direct costs and then operating costs of a more fixed nature. Direct costs are those costs that vary in line with revenue. Year on year, these costs increased by 17% to 43.5 billion. But we did hold those costs flat in the second half, despite a second half revenue growth of 16%. On the operating cost stats, these grew by 26%. These grew to 26 billion. However, once again, we were able to hold the costs flat in the second half. We are always undertaking cost initiatives, and the areas that we're currently working on include transmission costs, our inventory costs, and our network and IT operating costs. All this translates to an EBITDA improvement of 54% in the second half, and that can be attributed to the 16% growth in revenue in the first half, over the first half, and holding our costs flat over the first half. So our full year margin improved and runs at 35% for the full year. We believe that this EBITDA margin is sustainable. Our capital program, in which we invested 25 billion in Kenya, has enabled us to grow our 2G cell sites by 8% and to increase the number of 3G cell sites to more than half of our network, which is 5 times larger than our closest competition. This investment has also enabled us to modernise and increase the capacity on the existing base stations to handle that 11% customer growth and the 21% minute growth, and to deliver our strong financial performance. During the year, we undertook a number of working capital initiatives, such as holding the right level of spares for our network and keeping handset stocks to 90 days of sales. And this has delivered a 110% increase in free cash flow to 9.4 billion. We have 10.3 billion of net debt at the end of March 2012. And the applicable interest rates vary, but for example, corporate bonds average 10.5% that we pay, bank borrowings 18%, and cash on deposit another 18%. So in summary, we have achieved a second half improved performance due to rational pricing strategy, cost containment, and working capital initiatives, all contributing to a very strong free cash flow. So that's the year. So looking forward into the new year, we anticipate that our revenue growth will be in the low to mid single-digit range. We expect to maintain the full year underlying EBITDA margin through continued cost control and competitive customer focus. We will continue to focus on network quality and data speeds and expect our capital intensity to slowly fall over the next 3 years. And finally, centrally to delivering all of this is our focus on improving our customer delight metrics. I'd now like to hand back to Bob. Thank you.
So as we move into the future, in addition to protecting the growth and indeed the profitability of our core business, we will focus on the democratization of data, on growing our enterprise business, on extending and deepening financial services across Kenya, as well as improving the lives of Kenyans. In driving democratization of mobile broadband, we will focus on introducing low-cost, data-enabled devices, having affordable tariffs, relevant but local content, more content-based value-added services, and starting to exploit more backup and location services based on our investment in the cloud infrastructure. We will have an increasing focus on the growing enterprise business in the Kenyan market. We'll offer converged services to Kenyan small and medium-sized enterprise businesses. We'll provide a true integration across fixed and mobile platforms. And we will drive the uptake of managed service solutions for data storage, disaster recovery, cloud-based enterprise applications. Our ambition is to become the most admired business partner by developing cost-effective solutions that will enable businesses to succeed. Our financial inclusion levels in Kenya currently stand at around 80%. But M-PESA on its own is accounting for 75% of that financial inclusion. Now, there's been a significant increase in the number of women who are using M-PESA since its launch, and this is leading to their financial independence. M-PESA is also a means of saving towards healthcare expenses. We're working with healthcare providers utilizing M-PESA to increase patient access to healthcare. We will continue the expansion of our core and access network to address both quality and reach. We will see further modernization of the core network, and especially in the Western region, with the adoption of new and efficient technologies. We'll collaborate on reliable fiber optic infrastructure to lower the cost of our operations. Now, in the past year, the Safaricom Foundation has contributed 238 million shillings towards education, health, economic empowerment, the environment, disaster relief, amongst others. In addition, through our sponsorships, Safaricom has given in excess of 104 million shillings towards community projects across the country. In addition, many of our commercial innovations deliver both returns and significant social benefits in areas such as M-Health, e-learnings, and M-Agriculture. We remain committed to making a lasting difference to the lives of Kenyans. So, ladies and gentlemen, in summary, we think this has been a very good execution of our strategy. It has delivered a very strong set of results, and it has enabled us to propose a dividend of 22 cents per share. With that, ladies and gentlemen, that concludes our presentation, and we will now invite questions and answers from the investment community. The media will have your time immediately after the session. So happy to take questions and answers. Well, we're happy to take questions, and hopefully we can give you the answers. I think we have some roving microphones, I hope. So if there are no more questions.
I think last year it was delayed right up through to the end of November or something, or December, if I'm not mistaken.
The dividend is based on the register that closes at the AGM, which is the 13th of September, and we will be paying between the 13th of September and the end of November, with the target date being the end of November.
Any more questions?
The human capital aspect, I think your business is changing more to data and M-PESA, which is more on the financial sector. How are you supporting that with skills which are not just strictly skills acquired in the telecom industry?
That's a very good question, actually. Yes, in the financial sector, if you just use mobile phone people to develop financial solutions, you're not going to get the right solutions. Fortunately, my predecessor's here today, and I commend him for his foresight and courage in driving M-PESA. Fortunately, the team has developed it to where it is today, but we continue to poach amongst you people, your community, the banking community, to ensure that we develop the right set of products for the customers. Data is another one where we have to invest, and we're investing both in growing the trees as well as buying the wood. In other words, we're investing right at the level of the universities, and indeed one of our directors here, Nancy, I saw her back there from UQAT, is involved in developing that technical talent, and we support UQAT as well as many other universities to ensure that we develop the right talent, not just for our company, but also for the sector in general. Are there any more questions? So thank you very much, ladies and gentlemen. If the members of the media will, I think you'll be escorted up to the rooms upstairs, and the rest of you are very welcome to enjoy a cup of coffee and to look at the small presentation we have here. So thank you once again. Thank you.